I think that we focus too much on interest rates. I really do. Rates are merely the number set by the feds to get the economy to do its bidding. And right now we know that the feds are trying to pump the gas on inflation. So they're trying to get inflation below 2%. They're trying to get unemployment over 4.5% so they can curb spending and pull the prices down on stuff. So a lot of people are wondering, well, are rates going to rise? Are they going to go down? I'm pretty confident rates are going to be locked right where they're at until we get to the next election cycle. So I don't see a lot occurring between now and November. However, what will be occurring between now and November? We're going to see more price reductions than we've seen probably in the last 5 years, which means if you need to buy a house, if you haven't bought a house, or if you're looking to purchase investment property, the next 6 months are going, well, let's call it the next 4 months, are going to be a huge opportunity as more and more sellers become desperate because of these rising inventory levels. Why are inventory levels rising? Because rates are high and affordability is down, and fewer and fewer people can afford to buy housing, which means if a seller wants to sell, they're going to have to reduce their price to the affordability that the market can take action on, afford to buy. And so prices will fall to accommodate rates. For those of you that were actively buying and fixing and flipping properties in the 80s, where rates were sitting at 17 and 18 and 19%. And for those of you that were owning real property back then, you remember conversations with friends and family where you were bragging about getting a 14.25% rate. But consider what you were paying for housing, right? So it's all relative. Again, I just think we put too much focus on rates, and the market as a whole has been trained to respond to rates, where we as real estate investors should be less focused on what the rates are and more focused on what the rates are causing. Because the rate adjustments create new opportunities in every market every single time there's a rise or a fall in interest costs. So don't get caught up in the frenzy of it. Just know how to react based on what action the feds took.